Broadcasting furry truth and weather reports from a small comics box in secret. This is Furry Frequencies, your favorite furries at the highest frequency. Welcome, my friends, to another exciting episode of Furry Frequencies, where this week we are talking about stonks, stocks, and investments. Stonks, yes, we're talking about stonks this week, and this is Lifty, and joining me on the podcast tonight is Silox.
Hey, how's it going?
And our special guest for this evening is Solis the Wolf.
Hi, hello.
Hello. So, of course, this week being our investments and stocks episode, we do want to first preface by saying that this episode does not constitute financial advice. We are not financial advisors. Please seek a financial advisor if you wish to get into investments, and also seek the advice of a financial advisor before getting into any investment or any securities. So with that said, let's just get started by just, I guess, if you want to just introduce yourself, Solis, to our listeners who may not know who you are, and how you relate to investments and stocks, etc.
So I'm Solis the Wolf. I do mostly Twitch streaming and gaming and stuff on that. I do some YouTube. And when it comes to investment and stuff, I am actually extremely new to investing. I got super intrigued by the Gamestop situation that happened with the against the hedge fund. And I started asking some questions, poking some bears, and I found that it'd be interesting to get into. And I've been playing around with investing in Dogecoin, and most recently I bought into Roblox when it went public on March 10th. Just kind of doing a little day trading, seeing if I can't make a little bit of money, and or the cool thing about investing is it's kind of like it's a bank account, but you can lose money. It's like it's money that I'm watching either grow or get less, but it's still there.
So how do you feel about the sentiment that people think that the stock market is like a casino? Do you agree with that?
Well, I believe that depends on who you are. Clearly, I think with the whole GameStop stop bubble and everything that happened, it seems like, I mean, I think day traders and stuff, it's definitely like a casino where you're gambling. Just like I can use the Roblox for example. By buying in at 70 a share on the day it opened, it could have immediately tanked down to 40, and I would have lost $30 a share. And bam, you're out, and it may never recover. You don't know. And being that's why those investors, they get paid so much money when they do, is the ones that can notice trends or can really like predict when something's going to go up. So buying in early or getting out before a crash is very, very, very important. I guess the one thing is, so we're talking about casino. You're gambling with money. At casinos, when you lose out, you like lose out 100%. They don't say, oh, you put 1,000 in on that bet. Well, we'll give you $20 back or $200 back. Stock market, your stock's worth something. So, I mean, you're going to have a little bit to come back to. So I guess that's kind of nice when it comes to that kind of gambling. If you're going to buy a scratch off, maybe it's better to put a couple bucks into a stock instead. But the whole casino thing is like the house always wins. And with the GameStop bubble and what happened with all of the trading apps freezing trading on GameStop and Nokia and a bunch of it was a couple other stocks. It really seemed like suddenly all of these trading apps and all these the Wall Street was protecting the hedge funds and the big players, and really just kind of tossing their day traders and individual investors under a bus. I mean, I guess good businesses flock to where the money is. So I don't know how much individual investors really make up the stock market versus some of these massive hedge funds and these corporations that got big money into it. But it definitely seems like, well, funny enough, Robinhood like, where there's definitely a disconnect between the top dogs and the individual investors.
Yeah. And so as we're a furry podcast, of course, there is a big furry connection between what happened in the GameStop Short Squeeze and furry community. Of course, this woke up the furry community to stocks and also the Robinhood app, like you mentioned. For those who didn't know about Robinhood, they certainly jumped in at that moment, and that's what prompted a surge, at least in the furry community, a surge of users in Robinhood into retail investing. And of course, the big bankers, the big hedge funds, the long time stockbrokers, they hate people like us who just use Robinhood and throw a few dollars in there and play around with stocks that way. So that certainly, in a small way, contributed to what happened next with Robinhood. And what we learned is that Robinhood froze the sale of certain securities, GameStop included, Nokia, BlackBerry, AMC, and I was affected. I try to put in some money onto some shares of Nokia, and they blocked me right before the opening bell. It's like, you bitch, you absolute bitch, what the fuck? And I had no reason. There was no reason why.
The only thing that they were trying to say, the best thing, and because it wasn't just Robinhood. Robinhood, I think, was like one of the very first ones to do, and Robinhood gets a lot more of a gets attacked more because their whole thing is, I believe, like even their slogan is something along the lines of like leveling the playing field, know, and it seemed very opposite of that when you're telling people that they can't go and buy something with their own money on their app. Like, why are you freezing this? And the only thing that they said is, I think it's what's the FTC? Or whoever was, like, they were trying to say that what had happened with the whole Reddit push was that was like kind of like a legal move. It was what do they call that? I forget the term that they threw around, but basically you're not really allowed to like get a massive amount of people and then tell everybody to go buy this one stock to raise it up and then crash it. You're not supposed to be able to do that. The FTC will get really mad about that.
Well, I think that's kind of like the makings of a pump and dump. And
yes.
While it may seem like there's a pump and dump going on, when I was observing all this, it didn't seem like there was a pump and dump going on. It was just a bunch of people on Reddit who saw that one person was making boatloads of money on shares of GameStop, so they all jumped in, and it went crazy from there. The one person actually just took advantage of a technique called naked shorting, where a stockbroker could essentially who was borrowing more shares than the number of shares that actually exist. It's mind-boggling, but they were borrowing more shares than actually exists. And then when the call comes in, they can't make that call. They cannot pay for all the shares because there's just so many and they're losing money on all these shares. When naked shorting happens and somebody like the dude on Reddit caught it, that kind of triggered a massive revolt among retail investors, because this stock was shorted 140%. For those of you who don't understand what that means that they were borrowing 140% of stock that existed. And that's mind-boggling. That's absolutely mind-boggling. Like, how do you borrow more stock than what actually exists?
Magic.
And yeah. So I I didn't feel, yeah, it certainly sounds like magic, to be honest. It doesn't sound like anything plausible. Like, this breaks all bounds of what we thought about the stock market. And from there, you saw furries getting into it. Furries getting into Robinhood. They got burned on Robinhood when Robinhood decided, oh, we're just gonna limit how many shares you can buy of this security, that security, or we're just gonna not allow you to just buy those shares. Please don't buy those shares.
They would let you sell, though. They were glad to let you sell. You can sell all you want. That was like the thing is like, again, as you're saying, Reddit kind of like rallied behind this because they saw somebody doing really well, and they realized that screw it. I know some people that actually bought it, and I was almost one of these people. Robinhood froze their buying before I could get in the GameStop stocks, and I was going to be buying into the 300s, which means I probably would have honestly maybe made a little bit of money or lost a little bit of money by the end of all this. But there was a lot of people that did the same thing where they were expecting to see 3, 4, 5, 6. They were really thinking it was going to go up. So they bought in at the 300s and turned around, and they ended up losing money on it because not everybody was a winner on this. Of course, anybody who invested anywhere under $100 made some decent cash on it. But again, that's what you're saying. It wasn't really a pump and dump. It was kind of like, hey, look at this. I did this. I think it's a great buy.
Yeah.
Do what you will. And Robinhood froze everything so you could stop buying, so it could stop inflating it because they were getting scared, and they were protecting a hedge fund that had borrowed way more shares than there were.
Yeah.
It was interesting to see, though. I 100%, because of this whole thing with Reddit and everything, people all took an eye looked at retail investing, because when you hear Wall Street, and I'll tell you, before this whole situation, I really never thought of day traders and like the retail investors. I never really thought of that as like Wall Street investing. So when this all came up and I started looking into myself, like, thought, oh, this is kind of cool. Let's put some money into it. The furry fandom is very, very much so on the internet. It's massively on the internet, especially after last year with the whole quarantine and lockdowns and stuff.
Oh, yeah.
So with this kind of going on the internet, it not only do you have a bunch of just regular people getting intrigued by this, but furries hit it hard. And of course, it helps when people start throwing around Dogecoin and stuff too, because I mean, we're furries. If you put an animal on it, some furry will buy it.
Yeah,
that's true.
So speaking of Dogecoin, that's something else that kind of exploded in the wake of the GameStop short squeeze. A lot of people started getting into crypto, and one in particular that was actually booming during that moment was Dogecoin, surprisingly enough. And a lot of furries actually bought in. Some actually bought in when it was less than 1 cent, and now it's holding steady at 5.8 cents. So for any of you who bought in at that lower price, congratulations, you're making 5 times your money. And if it actually goes up to $1, well, we're going to see some brand new billionaire or millionaires actually.
Absolutely.
Yeah, just out of a meme coin.
Just out of a meme coin. So it's interesting because this all got me into looking into like how to invest right. So I know I'm gonna have to use Robinhood because it's the only thing I know. The Robinhood, and I know a lot of apps let you look at like a stock or cryptocurrencies like lifespan. So you can look at the last day, the last week, the last month, different periods of time, all the way up to years and even 5 years. And this can help you kind of decide on, do you think it's going to continue to rise? Do you think is it at more of a median price? Is it low right now and I can buy and it's going to go back up? you can make some educated decisions by doing this. And the interesting thing about, and I'll go back to GameStop too to look into this. But Dogecoin, like as of last year, Dogecoin finally hit a penny, just like twice. It peaked twice last year, into the penny mark, and that's it. It was much closer to the yearly averages before that to be under half a penny. Yeah. So the fact that it not only hit a penny just before all of this, but then it massively exploded because Reddit kind of like also said, hey, Dogecoin is literally like a penny or less than a penny. You can put in $100, get a ton of Dogecoin, and then if we all do this, then Dogecoin's base, it's just going to skyrocket, and we're all going to make money. Well, no, if everybody sells off too, that means it's going to go back down. So there's winners and losers out of all of it. But the fact that I know at one point in time during this big bubble, Dogecoin saw 9 cents. I think it peaked for just a bit at 9 cents. And remember, in the last 5 years, it hasn't touched a penny but once in the last year. So the fact that it jumped to 9 cents, if you had 1,000 shares at like half a penny, you just paid off your car.
Yeah.
So, and I mean, I did the same thing. I happened to get lucky and buy in at just over a penny. It was like a penny and a quarter.
Mm-hmm.
And then I sold off. I didn't sell off at 8 or 9 because I was really hoping to see that Dogecoin to $1 because, again, that would have paid off my car. It didn't make it. It didn't make a dime. It didn't make a dime completely. But I did sell out at 6 cents, and I made a good handful of money. The interesting thing is what we were talking about a little bit before this was the fact that it's still hanging around 5 cents.
Oh, yeah. And the crazy thing about Dogecoin is that there is no limit. There is no cap to how many Dogecoins can be produced. Unlike Bitcoin. Bitcoin has a hard cap of 21 million Bitcoins. Once it reaches 21 million, there are no more Bitcoins to be mined. And I kind of see that at that point, Bitcoin is going to just skyrocket in value. And before it goes down, and I'm really just curious, like what the implications could be of a future with Bitcoin or with the 21st millionth Bitcoin mined. But Dogecoin doesn't have that limitation. There will be an infinite amount of Dogecoins. I think right now there's a circulation of about 149 million, or excuse me, billion, 149 billion Dogecoins. And more are being produced, more are being mined every day. The hash rate is like a minute. So there's a very low, very low barrier to production on Dogecoin compared to Bitcoin. And not only that, Dogecoin is just it's based on Bitcoin. It's I forget the term already. It's a fork. Yeah, it's a fork of the Bitcoin blockchain.
Oh, interesting.
Yeah. And I've kind of noticed over a little bit of time, I haven't really I haven't observed Bitcoin and Dogecoin all that too well, but I have seen some kind of correlations. I've seen that when Bitcoin goes up, Dogecoin kind of goes down, and vice versa. I can't confirm that, but I have seen that for several observations. And it's a very interesting observation as well, something that might make Dogecoin a kind of a marker for Bitcoin and Bitcoin a marker for Dogecoin.
I don't know if it's going to be that direct. Interestingly enough, I think they may reflect a little bit of going up and down, but I think Bitcoin's only going to continue to have its average continue to rise.
Mm-hmm.
And I think it depends. And this is actually why I think Reddit kind of fell in behind it. And obviously furries jumped on it, but new investors jumped on it. I mean, when Reddit hit it, it was like he said it was like a cent, not even a cent, and anybody can toss $10 in and get a bunch of Dogecoin. You know, that's $10 at a cent. That's 1,000 Dogecoin right there.
Yeah.
So then if it goes up to 2 cents, you just made $20. You doubled up. And that's the thing is like with all these new investors that we're looking in, like me, on GameStop and everything. When Reddit kind of saw, Dogecoin is like one of the most affordable things possible. Yeah, it has no cap, so it's really hard to drive it up quickly. But it's also a very, very minuscule investment. It's a very low risk, and so that was like my thing. It's a very low risk, kind of more chance for a higher reward situation, and it was a great way for me to learn and get into investing. Like, put $20 in, play with it, try to make some money off that $20 on Dogecoin, sell when it hits highs, buys on lows, do that kind of stuff, see if you can't make a little bit of money out of it. And again, worst case scenario, it's not like gambling where you are completely out the $20. At some point you will sell and you will get some money back. So it's neat, and it was a great. I think that's why, it's why Robinhood had a lot of problems. Is when everybody decided to try and invest, Robinhood was one of the most easily accessible apps to get a hold of.
Yeah,
and they promoted this instant cash where you could deposit money from your bank account into Robinhood, but they would make that money immediately available, even though Robinhood wouldn't see the money from your bank account for up to a week. So that actually shot Robinhood in the foot, and I believe the first loan they had to take out during the whole debacle that the GameStop thing was, Robinhood had to take a big old $1 billion freaking loan or something, because I personally think a ton of people, well, A, because of all the trading that was happening now on their app that they did not expect, and then B, well, A, when you signed up for Robinhood, you got a free stock. Where does that free stock come from? So there's money somewhere there. You're getting a free stock. I put in $400 and had instantly $400 ready to go. However many people threw in 100 or 20 or 50, doesn't matter. I just know it was a lot of people. Suddenly, they've got no money because they've just loaned it all to us to start buying stock.
But
so they dealt with that pretty hard. But with Dogecoin, and that was the fun thing, is if anybody out there wants to check out investing, Dogecoin's fun only for the fact that it's really cheap and easy to get into. And I've had fun playing with it. It is very volatile, though. So you will see some days it will just drop down, and days it'll go way up.
And that's one thing that is in common between Dogecoin and GameStop stock, AMC stock, Bed Bath & Beyond stock, BlackBerry stock, Nokia stock. All of these had very low prices. All of these, that it was a low barrier to entry for many people who are just like you and me. They're not really very savvy investors. They're casual investors. They're very, very casual. They just throw in a few dollars from their paycheck and you see how it rides. A lot of us are very, very new to investing, and we just downloaded Robinhood. We don't really know what we're doing, but we're downloading Robinhood, putting a few dollars here and there in these stocks and seeing how they go. And basically that's it. Now what you're seeing is that all of these people that don't have a clue what they're doing are making money, making boatloads of money. And that's what prompted more people to join in, is that people are making money off of just a small barrier to entry. And it's crazy. This is almost like a get rich quick scheme, really. It sounds too good to be true, but it was happening. And of course it was making the hedge funds mad, because honestly, the hedge funds, they get mad when the poor people are making money and they're not. Like it's stock market is only fair when the rich people are making money. It's not fair when the poor are doing it.
Yeah, it was just one of those things where they got caught with their pants down.
Yep.
And honestly, it wouldn't have made that big of a difference because I can't remember the name of the person that's in trial. What's their name?
You mean the investor from Reddit? Deep fucking value? Yeah.
Yeah. So they fluctuated the market and got and they, if you talk to them, they had been investing in GameStop before all of this, but they themselves wouldn't have been able to really harm the hedge funds that much. It's because everybody kind of rallied behind it that really put the hedge fund in an awkward position that they've never really had to deal with before. And like they said, out of all of this, there's going to be movies and books wrote about this.
Yeah.
It's absolutely changing the game and how things are allowed to be played. There's a reason why this Redditor is literally on trial is to try and see if they broke rules, trading rules, which again, it's like it's kind of like pump and dumping, but it's like you're not allowed to basically tell everybody to buy one stock and only to like harm the system or something. It's weird. I feel like with how the rules have been played, I think everything was completely valid. I think them shutting down trading of it because it was going to do more damage, and that was the thing is that was definitely a stopgap when Robinhood stopped and all other trading apps froze buying GameStop. That absolutely slowed down the rise of all of those meme stocks they were calling them.
Oh yeah.
And it really mitigated a lot of damage, I think, because I mean, I was going to buy at least one, and that would have been another added to it. And who knows what could have actually happened. But yeah, I mean, going back to how all this worked out, GameStop, interestingly enough, so the hedge fund basically, as you were saying, what they do is they bought more stock than there was, and then they were hoping that they could sell it at a lower rate to make money.
I'd like to correct you a minute. They were borrowing the stock. They didn't buy any stock.
Right, borrowing.
Yeah, they were. So when you borrow stock, you're borrowing it to sell it and hoping that you're making a profit from the sale that covers how much you paid for it and a little bit more, so you can cover basically the amount of stocks that you borrowed over that. It's a crazy system. It sounds crazy, and it is, especially naked shorting. Naked shorting is by all means illegal, so don't try to get any ideas out of it.
It should be illegal, and that
it is. It absolutely is. It is, but I think that stock market, they do this all the time and nobody catches them. Nobody's the wiser when they do this.
I don't know if it's they don't catch them, they just turn the blind eye to it. And what I was getting into is like GameStop was hurting. I mean, when it comes to like the last year, GameStop stocks were in the single digits for the majority of 2020. And only around September did we see $10. When it got to December, it started heading towards 20, and then January, just before everything went crazy, it saw $20, and then boom, the highest stock was like, oh god, $350, $360.
Mm-hmm.
Speculatively, that hedge fund was gonna really damage GameStop.
Oh yeah,
because of what they were trying to do. It could have really pushed GameStop for bankruptcy. I mean, it would have dropped their stock even lower. When they were just trending upward a little bit, they were just trending up towards, we're back in the double digits. So it's funny that what the hedge fund was trying to do to GameStop, which is essentially bankrupt them and just make up a couple million or however millions of dollars off of it, ended up costing them millions and millions of dollars because somebody caught them on their naked short, which is illegal and shouldn't have been allowed. And Yet they still got defended by Wall Street.
Yeah. I think on another viewpoint of this, a lot of people, especially young people, saw this. Actually, young people of all backgrounds and different points on the political spectrum as well, saw this as a rebellion. They saw this as a rebellion against the wealthy bankers, the wealthy hedge fund managers that pretty much prey on weak businesses and hope that they fail. That's why they're doing all these shorting. That's why shorting is a thing, because they're essentially hoping that their stock price goes down so that they make money off of it. It's predatory, in my view. And a lot of people saw it that way, and they were rallying for Reddit and for these Reddit investors to actually put the hurt on all of these hedge fund managers. And I was looking at this and it's like, well, you know what? They get what they fucking deserve, to be honest.
Mm.
A lot of people didn't really see what was going on, but I saw very clearly what was going on. I mean, and it was just a moment where everybody just seemed to agree. Everybody seemed to agree on a common enemy, and the common enemy was the hedge fund managers. At that point, people stopped bickering about about politics. They stopped bickering about other issues. They stopped bickering about pause versus Moz. They stopped everything, picked up their phone, got on Robinhood, and started buying up GameStop.
Yeah,
It was a beautiful moment. Yeah, it was a beautiful moment.
Yeah, it's funny though that's even the whole point too. Is like it was the again, as we're saying, is the individual retail investors, even all of a massive chunk of them being new, versus the hedge funds. It's a Robinhood story, and then Robinhood defended the hedge funds.
Yeah.
Oh,
Yeah,
it's only we didn't talk about how the big some of the people were invested in Robinhood, so like it was even more so dirty. Like 0.32 or one of them was who was going to lose a lot of money on this.
Yeah, that was
invested in Robinhood, and Robinhood suddenly protected and froze everything. So it looked really bad.
And that was the that was the hedge fund that actually bailed out Melvin Capital, who was at the center of all of this, right?
Yes, it was Melvin Capital that got shot in the foot. Well, caught with their pants down.
Oh yeah,
I like that one because they were definitely they were streaking and just really hoped nobody saw. And well, they saw and then got called out. Not only did
people see, they decided somebody was going to get the biggest cactus and shove it up their ass.
I did want to address this though, and this is why the court case is also kind of happening against the Redditor. Is there are people that even though they like it was never guaranteed to be a win. Like I said, I know some people that lost a handful of money, like, a couple $20 here or there. There are people that they saw this happening and got way too excited and saw it as a win-win situation. Us versus them, we're all going to win here. But again, this is the stock market. So when everybody, if this stock hit $1,000, that's great. Everybody's millionaires, but except that's not how that works. When people start selling, it's going to plummet. So now you're starting to get into is, if you bought in at the higher shares and you don't get out quick enough, you're either going to break even, maybe make a little bit if you're lucky, or you're out money. And unfortunately for some people, I've seen some stories online where like some security guard went and took $10,000 out of a loan and bought GameStop at the high point and is now looking at, even though GameStop, which is for some reason this last month has been still kicking around the $200 range. which is again crazy. That it dropped heavily after the whole GameStop bubble burst, but it's climbed back up into the 200s again. So they're not maybe out as much money, but if you bought in the $300 range, it's gonna be tough unless the Redditor was talking about GameStop has to rebrand itself digitally or do something to make their business more viable again. Which is not a bad thing. Like, there's a very real chance GameStop can still do that. But for the people that bought high, they lost a lot of money, and people unfortunately got way too excited about the hype. And it did seem like I saw from, well, I knew it wasn't a win-win, but I could see how people saw it, or their perspective was different, or maybe they just got a little bit too much adrenaline, too excited about it, and they made a financial decision that was really rough. So that was something to kind of like also touch on is as new investors or any investing, or if you're going to go to the casino, don't only bring what you're willing to lose. Expect a full loss. If you go to the casino and you go in there thinking you're going to leave with $0 and you're okay with losing $200, there you go. Play around with $200. If you got $2,000 that you want to play with, that's fine. Don't do what that guy did and go and drop $10K on a loan, which is going to have interest against it, and end up losing money on it. Money that shouldn't have been put in play in the first place. No, like vice versa, you could say this. Somebody that would have bought in, $10,000 worth of GameStop back when it was $50 a shares and sold at 300, they might not have to, it just made a ton of money. But that's the truth is like the stock market's usually not this much of a gamble. That situation was a massive gamble.
Oh yeah. And so going back to Reddit and their subreddit that started all this, it's Wall Street Bets. So Wall Street Bets, a lot of the people there don't really know what they're doing. They're brand new to the game. It's basically, I think they branded themselves as if 4chan had a business account or
pretty much
some kind of something crazy. But
that's pretty much what.
But it's funny that there is a mix of people that know what they're doing on Wall Street Bets, mixed in with a bunch of people that don't. And more or less, the people that are there don't really know what they're doing, but they will play along with whatever good advice they hear on that site. There's a section of the site called loss porn. Some of the posts are tagged loss porn. And reading through these loss porn posts, it's crazy. It's absolutely crazy how much money some people sunk into this right at the high point or near the high point, like around $200, $300. That's when they bought in. Some people were actually thinking that it would skyrocket to $1,000 a share. And so they started taking out loans, like you said. They started taking out equity from their house. They took out reverse mortgages. It's unbelievably insane, the lost porn stories that you hear on this site, because when people got this crazy over GME, they started just losing all sense of money. And they just decided, you know what, we're betting the farm and then some. Get your shirt off your back. We're betting that too. And lo and behold, they lost. They lost big time.
Absolutely.
They're losing their home.
Well,
they're some of these people are facing divorce.
Financially,
on GME.
Financially, that can put a lot of strain. Something that you thought was a sure thing. So that's the thing. And this is what we're kind of talking about again: gambling, casino work, and stuff like that. The stock market really can't be considered like gambling in a sense. It is gambling. You're betting that there's going to be a gain and you're going to make money. That's why it's called investing. You're investing for growth. You're not investing for loss. But the thing is in this situation, you don't see stocks go from $10-$20 a share to almost $400 a share, and then plummet back down to $50 a share within a 3-week span. That doesn't happen. The market's never this volatile. And actually, in situations where the market gets quite volatile like that, if it wasn't just GameStop, if it was a thing across Wall Street, they have a literal oh shit button to freeze everything, to protect everything from plummeting. And
the circuit breaker.
It's literally a thing that stops all trading, just to make sure like whatever is happening isn't like a panic induced like sell off. And so unfortunately with GameStop, the situation is so unique in itself that stocks just don't do that. Stocks do not usually jump again that much percentage. You know, if you're looking at Bitcoin can move $1,000 up or down in a week or two. But by percentage wise, if they're $30,000, that's not as much percentage move as a $50 to $400.
Yeah.
You know, and that's what ended up getting people in trouble is in the stock market. Again, as I was saying, if you look at these apps and you look at a stock and its average for the last year was $2, it's right around $1.80. Buying that stock's not a bad idea because there's a good chance since the last year it's going to return to that $2. You might make a little bit bucks. It could shoot up to $3 or $4. You could make more money, or maybe it's on a downward trend and it ends up being a new average of $1.50 and you lose a little bit. So your fluctuation there, you're losing a little bit, you're gaining a little bit. If you get really lucky, it spikes for some unknown reason, or maybe you're doing your research and you knew the company was going to do something big, or there was something was trending to be doing something big, and you make some good money on it. But this situation was so unique in itself, and yeah, people pulled way too much money that you shouldn't be gambling with. It wasn't their money to gamble with. They gambled with it. And obviously, if you bought at $300 a share, now you can't. Well, now the stocks are back up to $200. So, you know, you're losing a third of your investment, which is still very, very painful. But I mean, earlier this month or like late February, you're looking at $50, $40 a share. That's a massive loss, especially if you put in thousands, $10,000s of dollars.
Yeah.
So,
and you
people
mentioned
lost a lot.
Yeah. So you mentioned the circuit breaker that's in the stock market, and I have seen that, or I have heard of that being activated several times within the past couple of years.
Happened last year.
Well, the last time that it was activated was when GameStop started spiking back up again. It started spiking back up to $100, and investors were kind of spooked by that, so they decided, you know what, let's do the circuit breaker on that stock. It's going way too high, way too fast. It's par for the best, and they did it, and it did go down a little bit, but once once trading resumed, it went straight back to the moon again. It happened again when GameStop started going up to $150, $200 the very first time during the very beginning of the GameStop short squeeze. And then also before then, I think around in March was
March
when
9th.
Yeah, March 9th was also a moment when the circuit breaker was also activated on the stock market because
COVID fears.
Yeah, the COVID fears made everybody just want to sell off their securities, and it was a very, very volatile time.
Surprisingly, they did not use the circuit breaker at all during the Great Recession. The day, what was that bank that closed? Lehman Brothers, I think.
Lehman Brothers. Yeah.
Yeah, they did. They surprisingly they never used the circuit breaker then, but there was a massive sell off that day when that bank went under.
Amazing.
Crazy.
That's amazing. Amazing they didn't use the circuit breaker.
Yeah. So if I could say something,
go ahead.
So I'll be perfectly honest. I'm not the well versed at this topic, which is why you've all probably been listening to these two talk about it more, because they know exactly what they're talking about. If I were to talk about it, I would just come across as ignorant. What I will say though is that when I saw all of this initially, to me, it seemed like people were celebrating the downfall of the market as if that was a good thing, and it was a snap judgment of mine.
Yeah.
And the more I learned about it, the more I realized, okay, this is less about that and more about people being happy that these hedge fund managers who seem to be able to do whatever the fuck they want without recourse from the Securities and Exchange Commission are finally getting it sticking to them. And so I sort of had a different perspective and a different opinion on all of that once I looked at it. Me personally, I dabbled in cryptocurrency. I'm not the biggest fan of it. I did Dogecoin. I lost a ton of money on Dogecoin. I'm not the biggest fan of crypto. Others are. If you want to invest in crypto, do it. Go for it. Some of you, for some people like me who are more conservative investors, small c, don't invest in crypto because, as was said, it's a very volatile thing. It will go up some days. Like some days, all it takes is a single tweet and it will just shoot to the moon. Other days, I don't know, Janet Yellen may say something and crypto just plummets. It happens. That's just how the market is. So
funny enough,
I'm so glad you brought that up.
Yeah. So funny enough, one thing that actually kicked off the GameStop short squeeze was when Elon Musk just tweeted out that one word, GameStonk. And then suddenly you saw the GameStop price just skyrocket. People were making money off GameStop.
Happened with Dogecoin too.
With Dogecoin, Elon Musk again. All he had to do was just tweet about Doge, and suddenly you see the Doge price just skyrocket.
It was an interesting thing to see because it started to the point where I started to think Elon doesn't care about Dogecoin. By the way, he does not care whatsoever. Elon also hates hedge funds because they've also they've tried to short the shit out of Tesla before. So he has a love-hate relationship with the stock market. And his tweet about GameStonks were absolutely in rebellion against any hedge funds because they've tried to ruin his business. They've tried to hope they short the shit out of him and hope Tesla underperforms and they end up getting hurt because of that. So he took a shot at them with the GameStop stuff. The interesting thing is I believe personally the Dogecoin tweets. It was kind of a meme thing and a Reddit thing, and it's publicity at this point. But it also happened to coincide when Tesla started doing some interesting things, like when Tesla randomly bought a ton of Bitcoin. Yeah. It was right around the whole Dogecoin thing too, and it kind of got muddied up because all you heard about was Elon and Dogecoin, not Tesla investing or buying a big chunk of Bitcoin. And I also partially believe it was Elon Musk kind of showing that his tweets and what he says alone literally fluctuates markets.
Yeah.
It was kind of a show of power because, I mean, to think that this guy can literally tweet a couple of words and fluctuate a market by several good percentage points is very interesting.
Yeah.
And scary.
Yeah, that's almost like a very scary superpower to have. And it's not just Elon Musk that we've seen it. Of course, former President Trump, he was able to tweet out all kinds of bullshit, and the market would just yo-yo on his tweets. It was crazy, and it's a kind of a really bizarre superpower to have, to be able to manipulate markets with tweets. That's why the SEC, they've decided to restrict Elon Musk from tweeting, and the tweets that he tweets out have to kind of be somewhat regulated by the SEC. Wow. It's crazy. It's absolutely crazy, and nobody.
I mean, when you're doing that and a tweet's able to manipulate the markets, that's not the way I look at it, that's not good. You have a lot of people who have 401ks and pension funds invested in a lot of these companies. And on the one hand, you can make that stock go up, but on the other hand, you can fuck over a lot of people and just crash
I
it.
have a problem with that concept though, because Elon Musk isn't doing anything. It's because people are listening and doing what Elon Musk wants, right? He's just saying words. Now, like, one of the things that last year was very intriguing about to me was especially in March and April of last year, was watching the president's COVID like, what was it, like the daily meeting or like the press brief, and it got to a point where they put a stock ticker in the corner and they put up what the stocks, your Dow, your was it Dow Jones, all of them, you would see the big ones where they started at, and based off of what the president said, would typically it would go down. They were not very good usually. But you could literally watch the market fluctuate real time, losing or gaining points based off of what the president said. And that comes to the other thing, kind of like Elon Musk. He doesn't have any direct control of how the market works. That's the literal fact that his influence is so powerful that what he says gets people to make moves. I don't think you should be able to regulate that, because that's up to all the people that are listening to them. It's their fault. It's up to them to make the decision to do anything. And honestly, it's not that it's like live trading is happening, right? It's literal experts are like, oh, Elon Musk just said this thing, I think it's going to trend upward, and then the stock market, you see it peak upward because of it. And it's just like, I don't know, like, I don't think that's fair, because again, it's just a man's words. It's up to other people, they're the ones doing the work. Like, why it really shouldn't make that big of a difference. Like, why is the market so focused on what Elon says?
Yeah, I get that.
Well, because he has a lot of influence and a lot of people follow him, and for whatever reason, they buy into what he may say about certain things.
But
I guess the only thing you could do is, sorry, I was thinking the only thing you could do is, because he's not putting out there like we did at the beginning of the episode where this is not financial advice. If he doesn't do that and then he says something like go buy Dogecoin and then people lose out their ass, maybe he should be held accountable for it. Maybe do something like that, but I don't know about like literally regulating tweets and stuff. That bothers me.
Yeah, and you do have a point. It's regulating words at this point, and it's a decision of people individually to buy the stock or sell the stock, but as a collective, as a group, it's hard to actually gauge the behavior of a group than an individual. You can tell an individual what to do at any time, but a group is way, way more difficult to control.
It is.
And that's just an unintended consequence of having so much influence, is that you may have too much influence that it might it can definitely destabilize markets. It could create havoc in finances, and like you said, Solis, it could fuck over a lot of common people who are just
I know. Both my 401ks got fucked up because of coronavirus.
No.
Yeah, both of them.
Oh yeah.
So I mean, then again, to be fair to the former president, the president's words, regardless of who's in the office, carry weight anyway in terms of the marketplace during whatever's going on. So that's less of an attack on him and more of just the attack on the weight that the office carries in terms of the financial markets. But
nevertheless, Elon Musk, while he is like the CEO of Tesla and all of these other companies that are underneath his umbrella, he is still just a private man. He is a private citizen.
So this is what I was going to get at too.
Yep.
So if they don't like what happened with the whole GameStop thing, because the rich got poorer because of it and they got attacked, and they don't like that Elon Musk's words can fluctuate a market, it's almost like they should regulate the market. But no, they want to regulate a man's. They want to regulate a man's tweets. They want to infringe against, I would say, free speech, versus regulating a completely unregulated market that should have some sort of bounds.
Yeah,
but I'm just a little individual investor, so.
And before we end here, we can touch real quickly on NFTs and how they pertain to the furry fandom.
Oh boy! So
I'm intrigued by this because I don't know. I still don't know a whole lot about NFTs and what the heck it means.
It's okay. I'm in the same boat as you.
So,
I don't understand.
So if I can, maybe I can shed a little light on NFTs. And I've been doing a lot of reading on NFTs, and there's still articles about NFT being produced every day, even from like places like the New York Times, Forbes, whatever. So NFT stands for non-fungible token, and what non-fungible means is that it is irreplaceable. Bitcoin is not considered a non-fungible token because you trade one Bitcoin for another, you still have a replica of the Bitcoin that you just gave to somebody. Okay. A non-fungible token is applied, or the label is applied to digital items that cannot be easily replaced. And so since then, a lot of things have just popped up as non-fungible tokens, anything from actual digital artwork to memes. The Nyan Cat meme. Everybody remember the Nyan Cat meme? That has popped up as a non-fungible token. I don't know how much that has been sold for, but it's in the market as a non-fungible token.
So, conceptually, you take something that isn't a non-fungible token and buy a non-fungible token with it. So you say, I want to give 5 Bitcoin for this piece of art or something, or the meme, right?
Mm-hmm.
And that now applies value to the NFT.
I kinda. I mean, the non-fungible token is pretty much worth whatever the market is willing to buy for it.
So literally,
yeah. And so here's what makes NFTs so valuable is that oftentimes they are used as a seal of authenticity. Or when you own this NFT, which is part of the Ethereum blockchain now, you own basically a digital certificate certifying you as the owner from the owner itself. And this gives you certain rights and privileges to this digital item that's an NFT. But you don't have the right to duplicate it. You don't have the right to like the artist itself, the person who created it, has some rights already. That they hold some rights even after they sell it. So basically, what you're selling, or what you're buying, rather, is a certificate saying this is yours. This digital thing is yours, and you can track that. You can track that through the Ethereum blockchain. Who owns it? What point or how much did they sell it for? How much did they buy it for? Who owns it now? You just track it through the Ethereum blockchain.
Okay.
And now furries are getting into it because furries have tried to sell digital artwork as NFTs. And by all means, furries have every opportunity to sell their digital artwork as NFTs.
Of course.
One artist that actually took advantage of this is an artist that we know on this show very much so, is Miles DF. Everybody heard Miles DF. Miles DF.
Of course, Miles would take advantage of it. Of course.
So he decided to put out a digital art piece and put it out on the the marketplace for NFTs. I forget the name of the market is. He started selling it at $273,000.
So, and this is what I was talking about,
Yeah.
assigning a value to something, right? So, as you said, now whoever purchases that for like $273,000, right? As you're saying, it's traceable, and the person that has it like basically owns all the rights to it. So when they go to sell it, they can basically go like, "Well, this was worth $273,000 because that's what I bought it for. So this is now the value to that." So I guess realistically, it just goes back to everything like, well, if you're selling it, you got to find somebody else that's willing to buy that for $273,000. It's weird. I don't get NFTs. Why is this a thing?
I don't get it either. But the funnier thing about this, the wrinkle of this story is that Miles DF actually put out a he put out a survey on his Twitter account as to how much should he sell this NFT for? Should he do NFTs? And the overwhelming majority of people who responded, I think it was like 50-60% of the respondents said, hell no, don't do NFTs.
Well, and maybe you can explain this to me. Somebody said something about NFTs like draw a lot of power on, I guess it's interesting because people say NFTs are like the devil.
Well, NFTs are pretty much, I guess, drawing as much power as I guess. I wouldn't even think that they would draw power because it's part of the blockchain for Ethereum. So it's like a note in this in the blockchain hash. It's not drawing nearly as much money as just mining a single Ethereum coin. NFTs are getting mixed up with Ethereum mining, and I think a lot of people are getting very confused. They're two very separate things. One kind of contributes to the other, as far as I understand it. I'm still kind of like trying to piece my head together, trying to figure this out. But yeah. Oh yeah. I saw that Miles DF tweeted NFT furry art and then put a poll down. Yes, 21.3%. No, 13.5%. Hell no, 65.1%. And what did this asshole do?
He went along with it.
He went and put out an NFT. And it got taken down, by the way.
Many of the major NFT platforms use the Ethereum blockchain, which consumes vast amounts of energy.
Yeah.
Ethereum uses a digital mining process similar to that of Bitcoin, but computers solve the increasingly problems to verify the transactions. So, assumedly, Ethereum's power guzzling system seem untenable for the future. Meaning, with NFTs being on them, what's the future to them? Oh, that's interesting.
Yeah, so that's a good point. If Ethereum's ability to be mined is highly unstable, it just sucks up so much energy to mine
computing power.
Computing power. If it takes so much computing power to mine one Ethereum coin, then NFTs aren't going to last very long. I mean, this is
they're part of the blockchain. It's just all going to crash then, right?
Yeah, that's what I would assume. I would assume that Ethereum is just like hurling towards kind of a supernova explosion, and in which Ethereum just crashes and burns and takes down the entire NFT market with it. So So what's crazy is that people are spending thousands to millions of dollars on NFTs. One of the names that have been popping up in NFT chats has been Beeple, the artist Beeple, And they're very interesting artists. They're very prolific artists. They were doing an NFT auction for the NFT for 5,000 of Beeple's artwork over 2020, and that one NFT alone cost $69 million, and that skyrocketed Beeple into being one of the most valuable living artists in the world.
An artist that's finally worth their value.
Yeah. It's like, wow.
Wow. The furry fandom's jealous.
Yeah. Yeah. I mean, they're all looking at Beeple and it's like, what the fuck am I doing? I'm just trying to make commissions here. And this dude just got $69 million from NFT. Well, Miles DF tried to do the same thing and look where it got him. But
NFTs are actually so just to say, does that mean the furry porn could be NFTs?
Yes.
Yes.
Essentially, yes. Any digital item.
How is 4chan? Please tell me 4chan has just made a mockery of NFTs by doing that. Stuff like that.
I don't know.
My digital signature is Star Fox related.
but no, just to test how crazy and how open the idea of NFTs are. Jack Dorsey from Twitter, he sold his very first tweet as an NFT, and that gained, I think, $2.5 million. Just think about that. Jack Dorsey's first tweet. What are you going to do with that? Are you going to print it out and post it on your wall? Or do you go to parties saying, yeah, I bought Jack Dorsey's first tweet? Like, what does that say about you?
What if I didn't sell it?
I mean, but that's the thing, that people buy these at such outrageous prices, thinking that the value of NFTs will only climb over time. Things like Jack Dorsey's first tweet can definitely appreciate in value because Jack Dorsey made that tweet at a while ago, and it is just frozen in time now. And it's of a very significant event. He founded Twitter. His first tweet is right there, and it's very culturally significant. Even though it's shit posting, it's culturally significant shit posting.
It's funny that it's a mixture of, it's honestly it's like trading collectibles or like buying collectibles.
Yeah.
Like the market decides what the value is, which is really interesting because obviously that makes sense. Something historical like the first tweet ever, and you're literally able to say that you own the first tweet ever. Does it sound, it's definitely kind of funky, but on the same note, to some people that's really cool. Like, you own the founder of Twitter's first tweet. And that can be worth money to people. People collect weird things all the time, and it drives up. The funniest thing is collecting currency, where something as like a 1920s old penny can be worth like hundreds of dollars. It's a freaking penny. It's an actual currency, but because maybe not so many were made or whatnot, or there was an error in the stamping or whatnot. There's only so many of them. I'm gonna pay more than the actual value of the coin, which is, it's interesting. I'm actually checking out an NFT site for the first time, and it's wild.
Yeah, it is. And we're still learning about what NFTs are and how they work and digital.
They're dangerous.
But yeah, it's just rich people throwing money at each other, throwing a big digital money party or something.
I really feel like NFTs and cryptocurrency is just how cartels, mafias, and things are just scrubbing their money now. Honestly,
there is a theory floating around about money laundering and NFTs, but
I feel like this would be really easy to do. But I don't know. You're right. It's a speculation.
That's neither here nor there. But unfortunately, as much as we want to talk more about NFTs, we do have to call time. Thank you very much for joining us to talk about stocks and NFTs, Solis.
Sorry, what?
Oh, thank you for joining us.
Oh, thank you.
Yeah.
I literally, my brain zoned for that one sentence.
Yeah, it's all right. It's all right. So if other people want to get in touch with you online, what's the best way to get in touch?
I am Solis the Wolf on basically all platforms. Sometimes the the is not there, so just Solis Wolf. I think that's like my YouTube. I don't know why I didn't include a the there, but you can find me on Twitter, Twitch, Instagram, YouTube, wherever you find a half black and half white wolf furry running around.
Yeah. Well, anyway, it's been a wonderful time speaking with you. And for those of you who are listening, if you like what you hear, please feel free to like, comment, and subscribe to our videos every week. And also hit that bell for notifications on our newest uploads. And also go ahead and follow us on Twitter at Furry Frequency, where the conversation continues. You can always tweet at us and also PM us on all kinds of things that are going on. Follow us for daily shenanigans or weekly shenanigans, whatever, new episodes and updates to our podcast. And anyway, thank you very much for joining us for another exciting episode of Furry Frequencies. We hope to see you next week. Until then, this is Furry Frequencies signing off with Lifty,
Psylocke.
Solis.
Thank you for joining us, and you have a wonderful evening.
Yep.